We all hear about retirement and planning for retirement and investing for retirement, but are all those things that we hear about that are assumed to be true really, really true? In this video, I am going to share with you retirement investing myths that I've personally found to be the case after years, well, about 40 years of investing. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I write about and talk about what I've learned over the past 40 years or so as a personal investor myself, as well as creating both traditional and alternative income streams after stumbling into early retirement along with my husband, Larry, about 15 years ago. If this topic interests you, make sure that you click the little thumbs up button below so you'll see my videos, as well as subscribe to my channel and click that little notification bell. Now, in this video, I do want to share with you what I've learned to be investing myths. And really, these myths came about as I mentioned we stumbled into early retirement, and we were around 50-ish. I was in my late 40s, mid-late 40s, and my husband was right around 50, and he's a bit older than me. And we sort of looked at these things as we were figuring out, okay, what are we going to do here? Are we going to move somewhere else and for employment, or are we going to do an early retirement thing and sort of wing it and figure this out as we go? And that's what we decided to do. But the first place we looked was sort of the things that we had heard all these years about stock and bond portfolio, right? You invest it and you expect this. At the time, I was estimating about an 8% return. Now remember, this was 15 years ago. And so things have changed significantly since then. They've gotten a little scarier and a little less generous with the income, right? Which we'll talk more about. But this is what I've learned. So the very first myth I want to share with you is that you can plan so that you don't run out of money. Well, that may be the case, but it may not be the case. You cannot know that for certain because there are so many assumptions about the plan, all right? So we're sort of led to believe, starting out early, that if we save, invest with stocks and bonds, etc., over the years, our wealth will compound and accumulate to the point where we can retire and be able to support ourselves along with Social Security and or any sort of employment retirement type of thing, which, as we know, is phasing out and we'll talk more about. But the first myth is that is an absolute given that we can do that. Now I'm going to move into myth number 2 from that. The retirement planning that's done is based on something called Monte Carlo simulation, and that is based on a lot of assumptions that it relates to what's happened in the past and how it will affect what happens moving forward with all these different scenarios. And the whole deal is based on estimates for both, not only how long we'll live, but how much money we'll save and how much investment return we will get. We simply don't know how much investment return we will get. Monte Carlo simulation uses past data to analyze all of this and make these projections, and they're just not rock solid. It ends up being a bell curve. And as you might remember from statistics, that bell curve, you've got the high probability of the outcome that you want right up here, but then you've got the sides that are going down, and then you've got the lower part that's just like flat, and it's not going to happen. So while we want it to work, it doesn't always work. And while it does often work, I'm just saying that there are a lot of factors beyond our control that affect whether or not that standard retirement planning and with traditional investing is going to work. The next retirement investing myth is that if you invest and save, you can live off retirement withdrawals along with Social Security after you retire. Well, you may be able to, and you may not be able to. It just depends on a number of factors outside of our control, including inflation and including the financial markets and the economy and other factors such as taxes and other factors as well that are way beyond our control. So It may work, but it may not work. And retirement withdrawals may need to be adjusted. We know they'll have to be adjusted upward for inflation because the value of our money depletes every year from inflation. But if we get into high inflation like we've had in the past, for example, in the early 1980s, inflation was as high as 13%. Well, can you imagine if the value of your money depleted by 13% just because of inflation? You could buy 13% less the next year, then that would sort of blow things for our retirement investing plan. So this can absolutely be a myth that we will absolutely be able to rely on retirement withdrawals and Social Security in retirement. And I'm going to share with you at the very end of this the solutions that we found to be the best that worked for us. So make sure you stay tuned to the very end. Of course, the other related myth to this is that we're going to be fine with spending less after we retire. The sort of rule of thumb is about 80%. We'll spend about 80% of our pre-retirement salary, so about 20% less. But I don't know about you, I'm not okay with that. I don't want to spend less as I get older. I want to be able to enjoy life and maintain my standard of living for all of my days, not just when I'm younger, which is now behind me, as you can see. The next investing myth is that stocks and bonds are the best way to invest for retirement, going into your 50s, 60s, and beyond. Well, it may be, and it may not be. Again, those factors outside of our control will tell us whether or not that was the best option. There's something called sequence of returns risk, and that study shows that before the years slightly before, leading up to retirement, as well as the years after retirement and the few years right after retirement, if we suffer through a bear market in those years, it can significantly reduce the odds or that probability on that bell curve of our retirement withdrawals working out. So this simply is not a given. It is a myth that we can completely rely on stocks and bonds to work out for us in retirement when that is our investing methodology that will allow us to make these retirement withdrawals for life. And the fifth myth is that retirement withdrawals are income. Retirement withdrawals are referred to as retirement income all the time in the media, in writing by financial experts, financial advisors, and planners. It is not income. Now, there may be some income in your retirement withdrawals, and let me back up just a second. What I'm referring to here is those retirement withdrawals are part of traditional retirement planning, investing and planning, and that's where you plan on withdrawing about 4% is the rule of thumb. Now, there have been many variations on that. It was 2% and then 3% after we had the bear markets in the 2000s decade. Then it rose up to 4%, 5% now that we've had stellar returns. It will probably be adjusted downward again. It varies. I am planning on a little bit higher retirement withdrawal. I won't go into too much detail here, but because of the strategy that I'm using for investing and the historical data that I use, it looks like I will be able to do that, and I'm comfortable with that. But let's just throw out that the rule of thumb with that is to withdraw about 4% of your investment savings every year to live in retirement. And that is referred to as retirement income. That's how people are supposed to live in retirement. You might want to check out my video, How Retirement Works, where I go into more detail about this. And I have other videos on retirement withdrawal strategies. But that is the basis, the foundation for living in retirement is spending your money. So while there may be some income that you're withdrawing in that 4%, maybe you've gotten some income from stock dividends, for example. In general, what you're withdrawing is the money that you saved, the earnings from your investments from that money that you saved, and the compounding of money over the years, as well as any income that money has generated over the years and the compounding of that money. It's not like income in the sense that you own some dividend stocks outright and you're getting those dividends deposited right to your account. So that feels like income to me. That is income to me. I get rental checks. That's income to me. That looks and feels like income. If I sell a covered call option, for example, I get that income deposited into my account. Various other things that I do, like online business, income, it goes right into my account. That's income. Retirement withdrawals are not income. They are spending down your capital, and it's a myth really to refer to those retirement withdrawals as income. Now, I promised you that I would tell you the solutions that I discovered in dealing with all this and becoming aware of these myths, whether they might work, they may not work. Some of these things will work out, others won't. They weren't reliable enough for me to count on. So the solutions that I came up with was simply to know about how much risk we have in our portfolio. I encourage everyone to do that. I work with my clients on figuring this out. Let's look and see how much money you have total in stocks, and let's look at historically how much risk that has involved and what is the likelihood that your portfolio will drop, and about by how much money. Are other areas of your net worth affected by this? So figuring out about how much risk you're exposed to, getting okay with that risk, and or adjusting your portfolio so you don't have so much risk if you're not comfortable with it. That's the very first solution, is managing that investment risk that you have, especially going into retirement, because, well, you simply don't have the employment income to, help you and deal with things, right? And the second area is to create income streams that are either traditional or alternative in nature, so that you're not strictly relying on those retirement withdrawals that may or may not work. We just don't know, because there are too many things outside of our control. And there are so many different types of income streams that you can generate now that simply were not available to previous generations and even a decade or two ago. So take a look at some of my other videos on that. That's what I wanted to share in this video. Remember, retire certain.